Hi, everyone. Welcome to Buffett and Beyond Research Stock of the Week for July 27, 2024. And we're going over Super Micro Company, and it's up 3,500% over the past 5 years. But the question is, can it stay there? And remember, folks, if you want to walk on this beach at sunrise like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And, well, what is this company? Super Micro Computer Inc. designs, develops, manufactures, and sells server solutions based on modular and open standard architecture. Sounds great, doesn't it, folks? And the company offers application-optimized servers and storage systems for various markets, including enterprise data centers. That's what we've been hearing about all month, all 2 months, all summer. Data centers and cloud computing. We've been hearing about that for years. Artificial intelligence, AI, fifth generation 5Gs, and edge computing. Has about 5,126 employees. So, folks, they're saying all the right words in their description because being in all those areas is the place to be these days, isn't it? And let's look and compare Super Micro with the average stock out there. Now, Super Micro is represented by the green vertical lines, and the average stock are represented by the blue vertical lines. So the clean surplus return on equity. Now, clean surplus is different than traditional accounting return on equity, so please remember that. Super Micro, 55% versus the average stock at 13.5%. Net income, oh my gosh, 89% versus 13% for the average stock. And revenue, we're looking at more than six times that of the average stock. So Super Micro is really bringing in the bucks. But let's take a closer look at this. So we can see that down here in 2021, 2022, we could see that the net income was going up. So they were doing very, very nice in there. And then all of a sudden, 2023, wow, they doubled the income or earnings, I should say, from the year before. And then for 2024, they doubled again. And now they're up about 50%, 55% projected for 2025. So right now, we can see that these numbers are just phenomenal over the prior 3 years. And one of the things that we want to look at, the numbers that you see here, this $11.43 was raised from $11.14, and this year 2024 it's $22 a share, raised from $20 a share, and then this $34 a share was raised from $27.87. So all these numbers are raised from the last time we looked at this stock, and the problem is that these numbers are below what the market actually expected. So we've got numbers here that are phenomenal and have been raised over the past 6 months, but then lowered, or did not meet, I shouldn't say lowered, they did not meet expectations. I don't know what the world was expecting here, but oh my gosh. And of course, the clean surplus return on equity. To get into our growth portfolio, we want to see a company that has a clean surplus return on equity. And just think of your bank account. Do you want to put your money in a bank account? Let's go back a second. You want to put your money in a bank account that's giving you 13.5% or one that's giving you 55%? Yeah, so that's how we kind of look in an offhanded way at the clean surplus return on equity, because all the research and 22 years of actual portfolio implementation shows that stocks with higher clean surplus ROEs outperform stocks with lower clean surplus ROEs. So if you put your money in a host of, let's say you have enough money where you want to put $250,000 maximum amount in each bank of 5 banks, you're going to pick the 5 banks with the highest returns that they're giving you as interest rather than the lowest 5 banks. And that's how you look at clean surplus ROE, folks. Retention rate, 100%. That means all the money this company is making putting it back into itself in order to grow. And boy, oh boy, we could really see that it is growing. Now, net income growth over 5 years, 89%, and projected for this year, 92%, almost 100% over last year, and now up another 50%. And of course, these numbers are going to go down as the company gets bigger. Revenue growth for next year, 57%, with the average stock around 7.5%. So yeah, even the projections for next year are really, really high. I mean, these numbers are really out of sight. They are, I think, the highest numbers that I've seen in a stock that I've analyzed over the first 6 or 8 months of this year. But let's look at what happens. Well, this is over 1 year, so these are 12 months. Each set of blocks is a month. So the company was going along, and then all of a sudden, bam, it shot up, folks. And now it's drifting down. So it lost almost half its value in here. But look, it's up 270% at the high point, and for today it's just about up 120%, with the market up about 20%. So 120% versus 20%. The thing is, a lot of people caught it in its heyday here, or a month I should say, and then it has been drifting down, and it's quite a loss if you were the person who invested right here at this point. So the key is, where is this stock headed, either down or up, and what are the market's expectations? Because it's making money. I mean, you can't even question that. The key is it fairly priced here? And when I say fairly priced, I mean, is it priced relative to the expectations of the market? And boy, oh boy, sooner or later it's got to get there. And maybe we'll look a little closer in our daily letter when we look at the charts, a lot closer than we're looking at them here. And then over 5 years, yeah, here it is. It was plodding along, pretty much equal with the S&P 500 down here. And then all of a sudden it took off, and then all of a sudden, wow, this year it just went crazy. And boy, if you had that stock, if you had it down here, and then you had this stock up here, or you bought it up here, you're feeling very, very bad. But if you bought it down here, you're feeling really, really very good. So we just have to figure out where is a good place to enter this stock, because it is certainly making money, and it's in all the right areas. So folks, the question is, do we or do we not get into this stock today or tomorrow or the next day? And that's our only question, because sooner or later we're going to be in this stock, and some of us are already. So remember, if you want to have lunch on this beach like Jimmy Buffett used to, you've got to learn how to invest even better than Warren Buffett does now. So folks, go out, have a good weekend, be with your loved ones, and we'll see you back here in a couple of days.